value stock territory, much more fair than some of the other names out there that are going 30, 40, 50x.
It's a little expensive. They are, however, the largest of the iBuyers between Zillow and Redfin. So, I personally don't like the iBuyers, but hey, whatevs. All right. So, gosh, it takes forever to get the terminal up, but once you get it up, it's, oh gosh. Okay, sorry. I just really hope nobody clips. Still positive. Oh, Zillow, Beyond Meat, Yelp, Wayfair. See, that's interesting to me. Wayfair got so beat up and they didn't even report yet. We have Redfin, Fisker, Zillow. Why is Zillow falling? That's interesting. Because I thought they did decently. What happened to the Zillow group? ZG, Zillow group. Yes, United did announce that they are mandating vaccines. I think we're going to see a lot more of that. But I think it's going to be too slow, and then we're still going to see lockdowns. Okay, Barclays just dropped the price target to $100 for Zillow.
It's real hard. And I've looked at Zillow and Open because I love disruption in real estate. And in some ways, I like the Zillow model better because it's more agent friendly and they make money off the agents and they drive a lot of leads to the agents. Yeah. And it's a wonderful platform, but they're selling house division, same problem. They just lose money and they're charging 8% commissions. Right. So
state sector stocks are in terms of these iBuyers. Zillow, Redfin, Open Door, these guys have all just gotten whacked. The one we're talking about. So I'm going to pull off that one. Let's go. What do we got over here? So, it's the entire industry here. If we go over to Zillow as well, let's go to Zillow. I wonder how the trends for searches are on real estate right now. That would be interesting because that could help us understand Zillow and Redfin maybe a little bit. See if we just do real estate or like homes for sale, right? No, this has been pretty steady. Let's go 5 years back. No, I mean, that's pretty stable. Let's go, let's try homes for sale. Oh, you got a spike. The longer they are sitting down, the less money they can raise in the market and the more screwed they get. AMD's had a nice sharp downturn here. Got Pinterest is another one.
I bought Zillow stock. This is literally one that I just purchased this week. I've been watching Zillow stock for a couple years now, but they've also introduced here with Zillow 2.0 some of the other services. So if you're a bull, you believe that the other services, aka Zillow Offers, the mortgage unit, all those things can start to build upon each other over the next several years. They're already driving incremental success every year with the Premier Agent, which again is almost like an advertising model. But the biggest thing is that they've captured the data from millions and millions and millions of users and homes throughout their time period. And in my opinion, that gives them an edge, much like a Google or Amazon, or much more revenue than they're seeing today. Zillow is already starting to nudge into profitability. They have an EPS on a non-GAAP basis, and that is expected to grow over time. Valuation standpoint, there's not a ton here. Zillow's just now dipping into non-GAAP EPS, so we can't really get into these forward PE numbers in the past because frankly, they've changed their business model in the past year or two. But we can look at price to sales today at 6. You go back in history, and I guess it's middle of the ground, but Zillow. Redfin comes in a little lower at 3.85. Open Door is the lowest at 2.11, 12+%. All right, let's take a look at some of the analyst projections so we can get into a price projection for next year. This year, fiscal period ending December of 2021, these are non-GAAP numbers. $1.19, which is huge growth from the year before, puts a non-GAAP forward PE at 78. I tip ranks and see what the best performing analysts are thinking for Zillow. We have several updates from the past few weeks here. Let me try to adjust it in. And you've got one hold and one sell in that mix. The price targets looks like anywhere from about 200 to 115. It offers 20 to call it 40 or 50% upside. These targets are supposed to be for a 1-year outlook, so basically August of next year. Remains strong, and so me saying $110 for Zillow doesn't imply a huge upside through January, but in which bull case you feel the strongest about. Love to hear your perspective in the comments. As always, please give the video a like, subscribe to the channel.
Yeah, Zillow, Redfin, I'm optimistic about these companies, but I can't wrap my finger around why these sold off this much. Like, look at
different funds there. It's funny, this one, 493 shares, Zillow, such a small amount. All the other ones pretty much pretty big. Look at this one, Dynamic Special Purpose. They bought 3 shares, that one.
So I just grabbed a home address off of Zillow over here, right? Maybe. But let's go to Redfin Data Center. I personally have a preference for Redfin and EXPI over Zillow, but those are just my choices. It doesn't make them necessarily better or worse, but those are two of them. Airbnb, ServiceNow, and Zillow. Halftime report, earnings up. Okay, latest news. Fauci on the Mu variant. Friday's job report. We've got Build-A-Bear up 3.85%. Charge points up about 3 and a bit here.
Things off with one of my most recent additions, and that is Zillow Group. I chose ticker symbol ZG for the Class A shares, but it also goes the same for the Class C shares with ticker symbol Z. It gets a little goofy though with Zillow because of that home buyer program. If things go wrong for Zillow, they could really go wrong for the stock. So you see we're at $92.
Going to be talking about, somebody asked for my opinion on Zillow Z. All right, and in regards to Z, this thing has been crushed from the highs of $208. And right now it looks pretty good. I think it's ready to bounce. I really
fully wrap my head around why Open Door, Redfin, Zillow, and then we're all selling off. Other than I think the stock market's just like, real estate's expensive. We don't want to be exposed to real estate. Fine. Incredible major dips here. They're still talking about intensifying slide. I see it recovering.
Do well. Just putting it out.
That's good.
Don't want to be too negative.
Oh, that's good.
Some things could happen.
Jim, tonight, Airbnb?
Yes, special announcement by Brian Chesky. He's got something to talk about. I think it's about Landmark. Number of people who have used it. And then Clint Cornwall, you want a hot stock. Beauty Health. This is.
If you haven't heard about the nonsense with the whole Zillow TikTok thing and Redfin TikTok thing, check my channel in about 5 minutes.
This week, NASDAQ slipped a little bit. I picked up a couple more shares of Zillow in that process.
$45.2 million interest payment. Just wow. Holy moly. Look at this thing. Who wants to look at the Zillow? Oh, look at the chess pieces. They're stone. How do you have stone chess pieces? Look at that. Gee whiz. Oh, that's so cool. I don't know how I feel about the swans over here. But so you're competing with Open Door, Zillow, Redfin, and all of them. How do you pull the margins? I mean, what's your usual return on a flip?
Well, right now, so historically, the last, 5-7 years,
Yeah.
our average profit was around $20,000.
Okay.
And a normal house,
You
back
gotta be
then-
good because you could have one thing go wrong.
Yeah.
And that 20's gone.
Well, yeah, you'd get some that made 40, some that made 0,
Okay,
and then
okay,
it
yeah.
averages to 20. But this year, with the market so hot, it's been our best year ever. We're over 50,000 getting deals everywhere. It's just like, if you're looking on the MLS and Zillow only, then yeah, you might be like, dude, where are all the deals? But
It's available in the or you had bad news like you did over at Zillow, where they decided the biggest piece of their business is something that they're just going to put on hold. But aside from that, the market's just going nuts. We started the day pretty negative. Now we're going very green. It's kind of ridiculous. So, is this sustainable? And
properties, it brought more than 3,800 homes in the second quarter to flip and is currently beyond operational capacity. According to figures seen by Bloomberg, the South Korean smash hit stands out.
To take a break from its home buying and flipping operations. As a result, that stock is down about 6%. Another mover to the downside is Virgin Galactic, of course, Richard Branson's space exploration company. It said last week it's not beginning commercial space flights until the fourth quarter of 2022. The shares fell 16% on that on Friday, and one
pain right now is obviously, in addition to Zillow, I mean, when you stop doing one of the biggest parts of your business, it's no surprise you're going to be down.
Delaying 9 of what buyers need to know, what Wall Street says about Zillow's iBuy pause. I don't think much. I mean, well, then again, Wall Street sold it off. They don't want to get. I don't think Zillow wants to get into the business of speculating on the market, although that is possible. I think it's probably. I think if they didn't have labor shortages right now, they'd still be buying and selling.
We're actually seeing some fairly positive housing market data, but Zillow long houses and is taking the rest of the year off from buying anymore. It's basically decided it needs to whittle down its record inventory. Let's figure out exactly what is going on here. The stock's been on a decline for a while. Bloomberg's Dave Wilson looking at the numbers.
Well, Guy, I mean, it's a situation that a lot of other companies are facing at this point because, when Zillow buys homes, they fix them up and then resell them. It's the fixing up part that's the issue. They need labor. They need supplies. They're having trouble getting both. So they've decided to put their business on pause and focus on the houses that they have, especially after buying more than 3,800 of them in the second quarter. That's twice as many as they bought in the first quarter. A competitor out of what they call the iBuying market, where it's all kind of based on these online appraisals, and maybe they'll have an easier time. We're talking about Open Door Technologies and OfferPad Solutions. OfferPad being much smaller, but nonetheless, I mean, it's all about the competition.
Now,
and in this,
Ira, it's the move of the morning. How much more upside is there to yields?
Yeah, I think yields can still go another 15 or 20 basis points higher from where we are now in the 10-year space. But keep in mind, we mentioned the inflation.
I was an investor and close watcher of companies like Zillow, companies like Nvidia, companies like Tesla. These are all companies that I've held through what people said were not going to work, and then people realized that they needed the services. I think it's obvious so far. I mean, the numbers scream for themselves. Whenever you're starting to 10x, and whenever you look at the actual competition, they don't quite offer such a good service as this, it's an easy buy for me. I'm extremely bullish, but you guys tell me what you...
I mean, it was up 17.5% yesterday. It's incredible. Zillow dropping another 1% here in the pre-market. Ethereum sitting at about 3,800. And we covered. Talked about Zillow. And kind of hit on most of these headlines already. We've had a pretty busy open live stream here, which has been very fun. Lot to cover. It kind of flew by. It is roughly time for me now to jump on over to the...
I've been getting a lot of questions about why the heck Zillow is getting out of real estate flipping. Why have they stopped their iBuyer purchases? A lot of madness is going on. A lot of speculation is going on around why.
In the short term, because it is quite ugly. You have Zillow also reporting. So Zillow, interesting, because I've heard a lot of conflicting things about Zillow. It's like they were buying houses, now they're going to stop buying houses. I'm hearing a lot of conflicting information. I think this is going to be the most important conference call that Zillow's had maybe in the company's history.
There's a lack of inventory, Kelly, but interest rates are still historically low. The economy is strong. We're seeing very, very strong signals. We're just hoping for more inventory.
More inventory. So you would still say to everybody who's thinking about selling that now is still a good time to do so? Because I've heard that they're holding out for some pretty high prices. Do you think that's going to be sustainable?
Earnings this week include Chegg on Monday, Pfizer, Corsair Gaming, and Zillow on Tuesday. Zillow had the idea of buying a ton of homes at the top of the market with the idea that they were then going to resell for a profit. And now they are struggling to offload them in many markets. Honestly, I think that business model is fine in the long run, and it's probably going to end up being a very, very lucrative idea given enough time. But in certain market conditions, it's not great. I'm looking for...
So a lot of those narratives in the market have just come out, and they continue to get worse. They don't get better. And I think that's really important because we talk about valuations a lot, and we also say that in a rip-roaring bull market, most people don't really care when you have growth and you have an optimistic outlook. But when things start to turn and the margins start to
Zillow offers, which of course, and the write-down of their existing homes inventory over the next 2 quarters. It's going to involve as well a reduction in the workforce of 25% over the next few quarters, and some really interesting headlines in the initial release here from Rich Barton, who will...
Look at what happened at the know-it-alls at Zillow. Gleefully cackling today. Yeah. These guys got in the housing flipping game. Oh, there's a game, all right. And they realized they were losing money all over the place. So now they dumped 7,000 houses, exiting that business entirely. Why? Because they didn't listen to us as we yelled at them constantly about, no. Because they were going down in value. Speculators get shaken out. Of course, this is very different from 2008 when
over 1,200. Zillow grew, and then we'll wheel it again. It's gonna be fun. Day 10 of the Tesla rally. Oh, EXPI down now 10.59%. I don't think that's justified. EXPI is absolutely killing it. I think they're caught up in this real estate sell-off. So is Redfin. Let me see what their volatility is like. Today it's probably up. Yeah, today it's up. Not as high as it has been before. They're just bleeding into the close. Zillow's actually popping off a little bit again. A little bit of buy the dip happening here. Zillow's the one that makes you wonder if you should buy some, or sell some puts on. See, if I go into Zillow, and let's say I sell some $60 puts, gives me a little bit of insulation. I'm only going to get 70 cents on that. That's lame. It should be more than that.
The dovish paper announcement, $1 lower, but only a little bit lower, just 0.2% or so. Equities at pretty much session highs, and indeed record highs.
Second day in a row.
The real estate sector that got wrecked today, thanks to Zillow. What you sold the property for, and this. So now you have, let's say, $5,000 of revenue, right? But then it still costs you money to do the work there at the property or whatever. So
to a 16-month low today after the company officially said it was exiting its home flipping business. The news prompting our next guest to cut its price target on the stock in half. Evercore Senior Managing Director and Head of Internet Research, Mark Mahaney, joins us now. Mark, great to have you with us. You wrote in your downgrade note that you basically saw the iBuying business as sort of a valuable option in Zillow's stock, a call option, obviously, not the opposite as we've seen here actually play out. And I'm wondering, to the extent that you saw Zillow growing by X% and reaching a, whatever it is valuation, if you strip out iBuying, what is that growth? What sort of valuation does it deserve given the ratcheted down growth expectations?
So it looks like the core business, what they call IMT, but really is kind of advertising for real estate professionals. We think that grows somewhere in this 10 to 20% range. It's low double-digit growth, 10 to 15%. There should be some financial models, valuation models for the Zillow offers, 10% of the entire equity value, maybe 20%, but not more than that. And you can see how much the stock has come. It probably got overbought at the beginning of this year. But to me, it's probably in that oversold territory. You can make a buy here on valuation. I think you want to wait and see what the plan B is. So what are you going to do now to offer something to home sellers?
Mark, I'm curious because at one point you thought this is a good idea.
Can you make money as an iBuyer, or is this problem idiosyncratic to Zillow? And my guess it's more the latter than the first. I don't cover Open Door or OfferPad, but my guess is that I've seen the iBuying market increasingly gain share in terms of total residential home sales. And I've seen those companies, at least Opendoor, generate some decent, profits. And so if they were better able to manage, 2 to 3 months out home prices and not get over ahead of their skis, there may well be a there. So
Morning, we were talking about, we had Steve Eisman on. He didn't like Zillow for just that reason of this asset-heavy business. I spoke to him this morning, said, what do you think? He said, I think it's a great business. They're out of that other one. This is a buy here. He said, and you can quote me on that, just so I know.
And there it is.
Turn. But I like it, and I'm going to be buying it tomorrow.
Tim.
As I saw Karen's toes floating down the stream, I started nibbling too.
Stock. This is one that I just started picking up in October. As a Zillow stockholder. Is this house fire, the end of Zillow, or is there an opportunity in here to perhaps get the stock at a discount? Now, for this video today, we're going to talk about what is Zillow right now. Today's announcement is the evolution of how we will help a customer sell her. I kind of thought at that time that it was a good move. Corporations in general, they're all rooting for Zillow to die at the stake, which is fine. But you definitely have 3 or 4 negative groups right now pounding on Zillow, and it's driving the stock price right down. So those are all the things that are not working for Zillow right now. Those are all the enemies and the naysayers. Let's take a look at what is working for this company. So here's some stats from the third quarter. The IMT segment, which is looking over here at Stock Rover, which you're going to start to see a lot more of Stock Rover on this channel. I have just started a little partnership with them now on Zillow. I think it's worth watching at the bare minimum. But for me, the popularity of the app, not to mention some of their secondary websites that nobody talks about, and their new focus on the customer who's trying to sell their house and or move. I like the odds there.
We'll talk about that news in just a second. So I'm wondering, is this potentially a bargain bin territory? Because Zillow brand is very strong, potentially an unrivaled business model, potentially an unrivaled brand, where a lot of folks on their journey to find a home and buy a home, Zillow is often one of the first stops in terms of research. And so the question is, could you, recognizing that this is a very strong brand, could you say that the business is cheap? Now the taker. So they didn't want to take on the pricing risk of home fluctuations. This was under the assumptions they could accurately forecast the price of homes, core profitable segments, their internet, media, and technology, as well as their mortgage segment. Mortgages is much smaller and less profitable. It'll probably grow much slower without the home segment. So I'd argue one should really focus on this IMT segment, internet, media, and technology market. So this gets me excited when they're saying, yes, we're going to maybe consider a marketplace solution to a deal or address, start immediately bringing to the table, is how Zillow just completed the acquisition of Showing Time, where they start investing journey subscribers. Anywho, if this video around Zillow has been helpful for you, your thoughts, and if you are a big Zillow bull and you disagree with any of this, or you think I'm missing something, I'd definitely love to hear it in the comments below.
And the XBI sold off for no reason after the Zillow stuff. It's kind of crazy.
Hard for people who are short sellers. I would argue that there's almost a dysfunction. It's emotionally, it's not necessarily healthy to do. It's never been healthy to do. It's really not healthy to do right now. I, of course, wasn't a short seller. I was providing research to the short sellers, but be wrong for a year while the stock triples on you, which is the case of a Zillow, for instance. It tripled from this period when everybody was saying its flipping business was going to be a flop, and then when it flopped, the stock finally came down and it's back to where it was a year and a half ago.
Shepard Smith here. Thanks for.
Of course, in this video, we're talking about Zillow and the fact that Cathie Wood bought Zillow only to sell it a day later for substantially less. Consider this. On November 1st, none of Cathie Wood's funds bought Zillow, despite being down 8% and Cathie generally being a buy-the-dip buyer. Then November 2nd came, right before earnings, and Zillow did not make any announcements yet about ending their home buying business, and instead, I made a video on Zillow talking about why it was likely that they were pausing their home buying business and therefore liquidating 7,000 homes. I blamed what I believed was management incompetence at Zillow. And this is very bad for Zillow. The next thing that's going to happen is they're either going to have to train this workforce properly, or they're going to have to fire or lay off thousands of people that they just hired. Which, by the way, if you want to join EXP, if you're a real estate agent, go to MeetKevin.com/EXP. That's MeetKevin.com/EXP. And you could sign up to join EXP Realty, which is a really awesome way for you to maximize your commissions and be part of the largest and fastest growing virtual real estate if you're an agent at EXP. So
it dipped almost 3 times, and on the first dip to $85, I actually made a video on my YouTube channel saying, should you buy the dip on Zillow? And I basically explained why you shouldn't buy Zillow, because of the business model, the home buying model, which is really, really bad. It's very low margin, it's capital incentives. They basically make around 5.5 to 5.6% margin on those homes, and they have to borrow all this money. So it's a really bad business model. But now Zillow got rid of the business model, and when I made this video, Zillow was around 84, 85, and I mentioned that if Zillow goes down to 60 or 55, then I would consider my position. So now Zillow is at 66. So in this video, I'm going to talk about again what's the new business model is going to look like, and my price target on Zillow, and if now is a good buy or we should wait a little bit more. In case number 2, now the expected revenue for 2026 for the IMT alone is around 10.94 billion. This is around a 20% compounded annual growth rate for that revenue, which what it usually grows at in the past. And it does not include anything Zillow does more to grow their revenue. Maybe they could do something, grow 25.
Automated home buying thing was a disaster. They sold 7,000 homes. Why are you kind of thinking you're not buying it? It sounds like, but you're looking at it.
We're looking at Zillow. Think about it. It hasn't been cut in half since its peak. It's down something like 70%. This is a once in a lifetime opportunity, Brian. I think it's one you have to take. So let's talk about what happened. The company believed it could sell real estate. It could flip properties with AI. Guess what? It can't. It discovered it cannot. You had what's called adverse selection. If someone was willing to sell to Zillow, probably they couldn't get a better price. They have $3 billion of real estate on their books that they need to offload. They've written down their portfolio by $300 million. I never cared for this business. The real money at Zillow came from all of its billions of annual users, daily users, and its TFT division, where it pays commission for realtors for lead generation. I think the company has real value. It's now trading at 7 times its TMT revenue. This is a buy.
Very quickly, Kate, Texas Instruments. We don't have time. Give us one sentence why you like them.
Texas Instruments is a great story that keeps working. It's gotten away from the semiconductor cycle, Moore's Law. You've got to buy Texas Instruments. They pay a dividend. They make commodity, very cheap semiconductors for anything. 2.4% dividend.
You want to be really careful about. I'm on the sidelines on Zillow, and it's a stock that I downgraded. I got the stock wrong. I thought that they had a reasonable path to profitability, sustained growth in the iBuying business. They blew that opportunity. I blew the call. But that's an asset that will be interesting to track once we get through beyond the iBuying catastrophe. There may be something interesting on the other side, but that's a fundamentals correction when you have these expectations.
Real estate company. And this stock had been down 25% in sympathy with Zillow. They posted a narrower loss than expected. Shares bouncing back in a huge way. To the downside, though, Bumble down 13%, now below its IPO price. They had their first paid user decline since the IPO. We also see Beyond Meat plunging down 17%. They issued their second straight sales outlook that was under the street estimate. And that calls into question whether or not some of the pandemic trends are really coming to an end, because, of course, Beyond Meat.
Squawk on the Street, it's now time for our ETF Spotlight, and we are taking a look at Cathie Wood's ARK Innovation ETF, ticker ARKK. It's still negative on the year after more than doubling in 2020. The top holdings include Tesla, Teladoc, and Coinbase. You can see shares are fractionally lower right now, but ARK making moves last week to sell most of its remaining Zillow stake, which is worth around $37 million. And Zillow is down more than 50% year to date, and just since the start of this month. So basically over the last 2 weeks, it has sold off something like 37 buying, and of course added more attention to its competitors like Opendoor and OfferPad Solutions, which have continued to stay in that market, even as Zillow has said that its algorithm just
dumped almost every Zillow share. Yeah, we've seen that. Seen her start. Sorry, it's weird, you know. Well, it's not really weird. Remember, she bought the day before earnings, but after those earnings, goodbye. Not happy about the real estate sector at all. Which honestly, I mean, like, even though that should be bullish for Redfin, Redfin's been a complete laugh. Shift Technology's down another 5%. Zillow's down another 5%. You're getting some pain.
2-week highs, and yet, Nvidia, where growth has been strong, continues to soar. It must be well over an $800 billion market cap right now. What's happening from your perspective? How much of this is driven by options and speculation, or interest rates, or what?
It's so striking to me. I think there's a really, really big disconnect out there where, investors
somewhere in the middle. All right, let's talk about Zillow. Here's a stock that I just started buying into on its dip. You had a price on Jan 4 of $150. It's down to $53. Let's see what the analysts are saying. This is going to be a tough.
Zoom, Zillow, Peloton, the IPO index is breaking down. The SPAC ETF looks like junk. That is, I think, healthier than you would think. And the reason why I say that's healthy is there were a lot of stocks masquerading as technology stocks and kind of rallying with technology that really aren't technology. Zillow is an example. It's like an advertising business for realtors. I think like Peloton is another great example. Like literally, it's a fitness bike with an iPad attached. It's not tech. And these stocks spent a year to a year and a half rallying with tech as though they were doing something cutting edge. And there are so many examples of that. So I think what you're seeing now, companies with real technology, like in
on it this month alone, Zillow's down 48, Teladoc, which he mentions, down 27, Roku 24, DraftKings 21, Robinhood 20, Palantir 20, Chegg's off 78% from its high, Zoom's down 57% from its high, Twilio 40%, Square 28%, and then you have the FANG stocks, which have done decidedly better. What I find so interesting is that you continue to place your money in those stocks, even as they've had their own runs. For example, today, you're buying new Apple calls, as that stock is basically at a 52-week high.
Video yesterday, look at Zillow last week. They don't need any more rocket fuel to be volatile, but yeah.
In the idea that we've seen the worst for Zillow, Peloton, Teladoc, Penn, DKNG, IPO, the SPAC ETF, ARK, like those stocks, this is not what bottoming looks like, unfortunately. Can we get at least like one day with a higher low, I guess would be the way I would put it. But to your point, regional banks, happy 52-week high.
Sumo stocks, okay? Here's the news. So this morning, U.S. personal spending exceeded expectations. We came in at literally the opposite. That's odd. So Zillow, very odd. Starbucks, quite odd.
So yeah, this is where I look at the list of like the Peloton, Zillows, Lemonades, Roku's, Pinterest's, DraftKings. They're all down, like 75%. I don't think that many of them are going to recover because they do not have the earnings growth to have supported what the previous.
What? Zillow's up 7%?
Revenue is going to be generated. Well, guess what? Your cost of capital increased, and you are going to continue to be challenged with your share price. Further selling is ahead.
Wow, because it's not like FANG Plus has lit the world on fire recently. Now, granted, they're not down as much as some of the other stocks, but, Liz, Microsoft over the last week, 4% decline, Alphabet 3%.
So that's when we make a lot of those moves. Of course, you saw us sell Zillow recently. It was a little bit of the same. Our style, it has been under pressure. Zillow does something most unexpected, changes the strategy that we thought they had been working towards for 10 years with Rich Barton, the founder of the company, coming back around to execute on this Zillow offers. And then they pulled out. They realized realized they didn't have the right DNA for it. And so we might have known that ourselves, I suppose, but it involved artificial intelligence. We thought Rich Barton was right there, was on top of it. So we did sell on fundamentals, that particular name.
Talk to me when you talk about investing in some of your highest conviction names. It does create concentration risk, not only with a single stock as much as 8.
Most people probably think of this company as a competitor to Zillow. But in fact, there are some key differences between Redfin and Zillow.
Zillow to shutter its home buying business quite literally left the door wide open for Open Door Technologies and other iBuyers. But year to date, Open Door Technologies stock is down close to 42%. Is there an opportunity here to get in on the ground level of an industry revolutionizing business? Or will Open Door's fate be the same as Zillow offers? That's what we're going to dive into in this video. You're watching More Money. Let's get it. So there's lots of room here for innovation, especially since the industry is largely fragmented with over 2 million agents, 4% market share. And I think that's more reasonable and closer to my estimate of the homes accurately, which is what took down Zillow offers. There's another inherent risk in this business model, much lower than the average to fix and flip a rental unit is. I think it's weird and a bit misleading that they're putting non-performing loans, home builder homes, and performing. I'd rather do that than make a mistake of commission. Now, since we chatted a lot about Zillow in this video, check out my series on Zillow. Since the share price dropped by over 50%, could the remaining businesses be significantly undervalued?
I also discussed Palantir, and if we look at the performance of these stocks, Zillow, for example, which was in the large video, 10 stocks, 70% down. Palantir was recently discussed, okay, now it's a little bit down, but pretty stable. DocuSign, so it has been stable, now it has really crashed a little bit down, okay, 40%, not that much. I told people to avoid NEO like the plague. I think it was somewhere in February, so it is a little bit down. I will put all the links to the videos I mentioned.
$100. Square, did it go over 300? I'm not so sure. Zillow, obviously, complete disaster this year, but let's see if they can recover next year. Then RTR, Zoom 600, Tesla 1100, and Fastly 200. Close with Tesla, with the others, not so much.
$212.40. Yes, that means that the value of Zillow right now is about 75% off its all-time highs. And if we take a look at the one-year price chart, we can see exactly why that is. Back in February of this year, they actually hit their high of over $200. Their next earnings releases on February 9th, so hopefully Zillow has some more positive figures to report this time around. Either way, I still believe that Zillow is extremely undervalued, with its current price hovering around that when the pandemic first started. Personally, I will be dollar cost averaging this company into my portfolio. All right, our next stock is Extra Space Storage, stock ticker EX.
A pretty good opportunity.
What about Zillow, which has obviously had a tough time of late?
So Zillow's a name that we've owned for years, really backed off over the summer as some of the troubles started to emerge with their iBuying business. We were surprised, I think, as well as exit this business completely. And then once that happened, we re-engaged in the stock and made it one of our larger positions. Because basically, Zillow today still has no peer. They dominate the online real estate market. They're the leading platform by far. 2/3 of all real estate transactions at some point touch Zillow. And there is one benefit to this. They may actually have a bit better relations with agents and brokerages now that they're not more directly competing with them. So we could see them coming out of this kind of transitionary period even a bit stronger next year.
Let's go to Digital Turbine.
Let's ask Jeff Tucker now. He's a senior economist at Zillow. Jeff, where could things be even hotter than they are right now?
So we're really expecting the hottest markets to be in the Southeast this coming year. So places like Tampa, Raleigh, Jacksonville, Atlanta, and Charlotte. All of them were forecasting for more than 20% price growth in the coming year. And it's a lot of the reasons that we just heard about in that segment of not enough supply and record high demand. These markets have something like half as many homes available for sale.
Right now, it's behaving well for now. And the stock is Zillow. All right, we got to talk about Zillow again because Zillow is doing what I told y'all it would do last night. It's opening up higher.
But anyway, so mine is zombie, and that is Zillow,
which we've talked about a lot. I love that they got out of the iBuying business. I love the assets that they have left, and I love that the stock got absolutely crushed. So that's the first one. The second one is the OIH. I, too, want to have exposure to energy for all of the reasons that Tim just said. It fits my acronym nicely, and I do own it, so that's why I picked the OIH, but it could be expressed that bet a lot of other ways. The third one is Meta Platform.
Trying to figure out how to spell it. That's, it's difficult for me. Well, Zillow, I think she's spot on, because if you go back, we had people come from the Irisone conference, and there were at least 2 people, I think, where Zillow was their best bet, and then it sold off precipitously. So I think she's getting it at a great level. So I'm with her on the zombie. And Meta, I said it 100 times. I hate everything about the company, but Karen is spot on. The Meta portion probably hasn't been priced in. That's going to do well further.
I own DraftKings. Karen talks about Zillow. I kind of agree with a lot of these. So these are stories that for different reasons got tweaked significantly higher. I just think that we're going to have a fascinating conversation with Paul Sankey later on in the show. I mean, think about some of these carbon footprint oil companies that are going to be carbon neutral in 15 years.
And is it going to get to $70?
Double-digit rates of appreciation in second home markets. Zillow is forecasting 14% rate of appreciation in primary home markets. So if you were to include housing costs, then the Fed would see an even uglier inflationary period. So the problem with that, of course, is that the Fed is pulling back, and therefore companies and investors are moving further in on the risk curve. So